How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for October 9, 2018. Here's a snapshot of the positions held by the institutions as of that date. And so let's take a look what the institutions have been doing. In terms of gold, what can we see? So we got that break to the upside this week, which is exactly what we have been expecting for some time. We had that momentum to the downside, it paused, and now it looks like we're getting momentum shifting to the upside. On the weekly, you can see that we were overextended and we broke up to the upside, and we knew that this move was to be expected because of this here. Shorts were so aggressive, and when I took a look at previous charts and previous data, I could see that every time the institutions were this aggressive with their shorts, they took profits and it caused price to move to the upside. So at this point, what we are expecting is a bigger penetration here of this area here, and potentially even all the way up to this area up here. Okay? And that would be perfect because there is a monthly area of supply there, which would facilitate a move further. Bottom line is we are expecting price to drop further in the future. Not immediately, but in the future. And so if that is the case, then you'd want the institutions to start building a bigger short exposure, right? So over the last few weeks, we see that that's what they've been doing. They were net positive, now they're becoming net negative, and the numbers are increasing. So that is exactly what we want to see. And what we also want to see is, as price is doing that, them closing off some of those shorts to only increase those shorts back up here. Okay, so as the longs decrease in preparation for the bigger move to the downside, shorts should start to decrease as well, and then eventually add them at higher prices. So far everything is playing out exactly as we had thought. So let's take a look now at oil. What do we see? So we see that institutions push price up to the weekly area of supply. And as that happened, they took off a lot of their long positions for profits. Boom, profit taking. This is exactly what I've been mentioning over the last few months. And so we see that happening here, to 653,000 down to 633. And if you take a look at shorts, a slight increase, but that's normal. What will tend to happen in areas like this, if we are expecting a bigger move like this, is the institutions will focus on taking off those long positions. That will be their main focus, taking off those long positions, and they won't be focusing on adding shorts to any impressive levels until they've reduced their long exposure to levels that are satisfactory to them. So you can still see that they are very aggressive with their long positions, net positions still very aggressively in the positive direction, on the positive side. So it will take some time for this to play out, and it's in perfect timing, because if you take a look at the US dollar, we are expecting eventually for a bigger move to the upside to take place, and with that the USCAD as well. And so we will need this to play out, take its time, so that the USCAD can drop along with the US dollar weakness, and then eventually found a foothold, build a foundation for that eventual move to the upside, which will help facilitate the bigger move to the downside on oil. So far everything is perfectly aligned as far as I see it. So let's take a look now at the US dollar. They increased longs from 43,000 to 48,000, and they also increased shorts. Why are they increasing both? Interesting. Are they increasing shorts because of a move to the downside, and they're increasing longs to build a bigger long exposure for the eventual move to the upside? I think that is most likely what is in play. Now this chart is not very clear. I will be breaking this down on the next Forex Market Outlook video and point out what I'm seeing here. But in terms of positions, I see them increasing longs, increasing shorts, and it makes sense that this is what is going to take place based on what I'm seeing here. Again, overall the sentiment is bullish. We are expecting a bigger move to the upside, but short term I think we're going to be seeing more downside. Aussie, what do we see here? So a big increase in longs and a big increase in shorts. What we're seeing here is very similar to what we're seeing in the Kiwi dollar, and so with the Kiwi dollar, that has a different circumstance playing out, but the data and what's happening is the same thing. Okay, look at what we're seeing with the dollar. We're seeing them increasing the shorts, okay, and increasing longs. Are they increasing shorts because price is going to drop? Well, take a look here. They're increasing longs. Are they increasing longs because they're going to be expecting a move to the upside? I think that is what's taking place here. I think that's exactly why they're increasing their longs. See, if you're eventually expecting price to do this, you want to accumulate a nice short position, right? But do you want to accumulate a short position down here or up here? Well, obviously up here. But if you had to open it down here, wouldn't it make sense to open up longs as well, so that when price does get up here, you can close off those longs, and it's as if these short positions that were opened here are now opened here. So that's the technique that the institutions use quite often. We see this over and over again. I think that's what's taking place here. So let's continue on. We'll see if we see the same theme playing out with all the other pairs. For the USCAD, we've got a decrease in longs and a decrease in shorts. So nothing here really telling us what's taking place. Bottom line is sentiment is neutral, so that means hold off on the sidelines. We got some interesting things happening here on the weekly chart, and it's pretty much aligned with what I am expecting to see on the US dollar in the coming weeks. So I'll detail this in the Forex Market Outlook video for members. Here we go. US Swiss franc. We see an increase in longs from 25 to 27 and an increase in shorts. So very similar. Are they increasing longs in preparation for the big move and increasing shorts for a move to the downside? I think that's what's taking place. Remember, this data comes in as price was rallying right into this weekly area of supply. So moderate force to the downside. We should see some downward pressure, and I think we already started seeing that this week. How much more? I think a little bit more before a move to the upside. Sentiment is neutral, means sit on your hands, do not open up trades, and I think this is the perfect advice for this chart right now. Let's move on to the next one, Euro. So Euro's chart's a lot clearer than the dollar, and it suggests a bigger move to the upside. So let's take a look at the data and see what that suggests. They closed off some longs and they increased shorts. Doesn't really suggest a move to the upside, but we can tell by the technicals that we should expect a move to the upside. Bottom line, what have we been saying here? That if they are going to eventually push price a lot lower, which is what we have determined is going to happen, do they want to be so overly leveraged with their longs? The answer that we've come to is no, they do not. So do they really need to be focused on adding long positions right now if price was going to move up? The idea of this, what's happening here, is no, they don't. Not in this circumstance, because they have already been over leveraged on the long side. What they want to focus on is lowering their exposure on the long side and slowly increasing their exposure to the short side. So I'm not going to take what I see here literally to determine what is going to take place here. I'm looking at the bigger picture, and all I see is them wanting and needing to take off more of their long positions in preparation for that bigger move to the downside. And so far I'm seeing that. Overall, take a look here. Sentiment is neutral, meaning do not be taking trades right now. And I think that's a great piece of advice for this. Pound. What do we see? Longs very cooled off. Shorts aggressive, but have been declining over the last few weeks. Weekly area of demand and control. Moderate force to the upside. We have a slight bearish sentiment here, and net positions are to the negative. So I think this is one of those charts that also help to support the idea of a weak dollar and a strong euro. Because as we see some hedging going on with the positions of the institutions, and we see larger time frame areas of demand coming into play on the euro, we're also seeing the same thing happening here on this chart. Okay, bottom line is they were very aggressive and they're becoming less aggressive. Is that in preparation for a move to the upside? I think that is exactly what's taking place. Okay, so now let's take a look at the US dollar Japanese yen. Remember, Higher time frame areas of supply and demand coming into play. Same thing here. Tested once, deeper penetration. Now we get the drop. And as we tested into this weekly area of supply, what do we see? They were very aggressive with their longs, but now they're closing their positions. Okay, so closing the longs that they added here over here. Now price is retracing downwards. I'm looking to see for them to build a foundation before the eventual move to the upside. Bottom line is sentiment is bullish, so we are looking for the long signals to be produced, and they will be produced. So just a matter of time until they are. And finally, we have the Kiwi dollar. And here's the thing. This is the one that I was mentioning to you about, looking at it in relation to the US dollar, or the Aussie US dollar, because same thing is happening here. We see them hedging, okay, adding shorts as prices dropping, but they're also adding longs. Okay, so adding shorts as prices dropping, adding longs, so that the eventual move to the upside gets them a better price on those shorts. But we're hitting and reacting from weekly area of demand, which is forcing the price to the upside. Sentiment is bearish, very bearish. And if we take a look at total positions, we can see that it's in and out of aggressive territories. So it's tough to judge what is going to take place here, because we do have a weekly force in control, and that is going to put a lot of pressure to the upside. Bottom line is longs, even though they have increased from 10 to 15, which is a huge jump, that helped facilitate this move to the upside. At the end of the day, they're still very cooled off, and at the end of the day, shorts are the aggressive one. Bearish sentiment is still in effect, and we got net positions in the negative. So we got short signals to take advantage of to the downside, and we got further instructions on this pair that was going to be sent into the portfolio for members, and you'll be able to read that later this week. All right, ladies and gents, that is your CFTC report for October 9, 2018. Hope you're having a great weekend, and I hope you use this to help you prepare for the rest of the week. All right, until next time, take care of yourself. Bye.